Hey, what is up, dudes? It seems like a lot of people on the YouTube comment section and just on, the social media in general are very surprised about the gap up on today, like on Monday, like from last Friday's price action. And then they're trying to be really salty about it's like, oh, what now, DD? You never anticipate this, blah, 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 blah. But the funny reality here is we actually in our Patreon exclusive chat on not only on August 28th, 2021, you can see nothing has been edited. I said DD official the dum dum, right? This is like the enduring or maybe the real nickname that everybody's calling me, right? I said, hey, the volume profile shows that MMAT will have a gap up on Monday, but the question soon becomes how long it will last. If the preceding volume does not support an overall upward action, it will get bashed down very fast. Since Friday is an anomaly due to the absence of shorts in the system. And if you scroll back, because I don't want to blur out those things and trying to make make edits of all of the conversation we had in the chat. But before then, by the end of market end on Friday, I've already said that there's going to be a huge gap up on Monday. I mean, it's already anticipated. I mean, we just didn't really act on it by, start buying $4 calls or start buying $3 calls or start buying, like preemptive $5 calls or something like that. We just didn't do that. On the contrary, we just made a plan to make sure that everybody in the chat or everybody, in the community understand that what might happen when the FOMO trend started, and then it's just not going to last long. And then there's no point of you guys trying to be salty and be like, oh my god, it's going to be a huge squeeze. And even on the comment sections, people are talking about a forced squeeze. There's no such thing as a forced squeeze, guys. You cannot force squeeze anything. Like, of course, this can be seen as a squeeze, but what really happened here is you just have a bunch of volume piling up after hours, and then you don't have enough shorts to really stop the price action. But as I anticipated in Discord, there's going to be huge short momentum coming in on Monday morning and midday. Why? Because on Thursday, there's only 20% short volume. And then if I'm right, I haven't checked today's short volume yet, but today on Monday, the short volume is going to be around 50% or even over. And if on Tuesday, it's going to be 50% or over, the price will not sustain over $5, and it will not even probably sustain by $4. So by the end of this week, the price might actually just go down to $3.8, right? Like, we have to be rational here. You cannot be emotional and be like, it's going to be 100% squeeze. It's not. If I think, Torch / MMAT is going to have 100% run like SPRT or like BBIG or like any other things, or like just a 40% straight up run like Neuro or whatever, I will tell you guys. In the Patreon exclusive chat. I will make videos on YouTube. Maybe the YouTube video is going to be a little bit later than when I inform my Patreon members. But hey, it's just gonna be out there, right? Like, two of us, the three of us already comment down in our YouTube section and be like, oh, I made this much money just by looking at your videos and just being an active community member in your Discord. It's just like, sometimes I just don't get it. Like, we're not actively shorting it. We're just buying puts to hedge our positions, right? We're not even shorting it. We just understand that the price action is not gonna, sustain itself by this amount of volume and by, because the entire US is in a very cash scarce environment, and the money funds are seeking reverse repo in terms of like a longer run action to save their returns. And if you look at like all of these small cap actions, these are very short-lived small cap actions. And if you go back and look at what happens by the end of 1999 before the huge burst on the market, you will understand that hey, there's some charts that behave similarly, and sometimes it cannot sustain an action. And if you are really good at technical analysis like I do, you look at this gap, you'll be like, so if the price action actually drops down, that means how much this gap is filled is gonna be it's gonna be like keep proceeding how much these gaps. So let me put it this way. So this gap's already filled 50%. So how fast do you think the other 50% is gonna be filled without further volume support? Right? You have to be very rational here. You can't just go in and be like, go in super gung-ho. It's like, yeah, let's just do this. Let's make it happen, right? Not gonna happen. Not gonna happen. And if you think that's how you're gonna roll with your money, with your hard-earned money, It's not gonna work. Look at this, look at this. In order to justify this volume movement, you have to have twice the amount of volume movement today, which it has, right? But if this volume movement is green, then this stock's gonna stabilize at $6.2. But guess what? The shorts come in and squash it, because what they realize is you cannot keep further shorting the stock when it's at $3.4. You can only make $3.4 in general. And then right now, this just like, this entire action doesn't have any shorts to basically gatekeeping you. So what it means is they pull out their position, wait until you FOMO up, and what they're gonna do is they see a price point at $6, at $7, at $7, at $6, $6.5, $5. They just come in and just massively short it. That means their maximum profit is gonna be twice as much as before. You see, the market is vivid, the market is fluid, it's never it's in flux. It's never a static thing. Like, it's all about adaptation. And a lot of people are saying, hey guys, this is just gonna be a short squeeze. Sure, it's a short squeeze, but you have to get out before it's too late. But then if you look at the option chain, if you go back and look at the option chains, guys, if you go back and look at MMAT's option chain, you will see all of these unrealistic FOMOs. I mean, on Patreon, you know, we by this video getting posted, we already posted the option play we made today. Like, today we basically, what we did, the adjustment we did today on options, no matter buying puts, buying leap calls, selling calls, or selling puts, we were basically already locked up at least 40% of our premium in one day, guys. Like, go look at all these FOMO at 6, 7, and 8, and even if you go back and look at all these FOMO in leap year options, it's unjustifiable. And if you got like all of the leap year options, like, guys, really? Like, dude, honestly, like 14, like, look at, you see a 25 volume increase in a leap option at $14, way out of the money. Out of the money, guys. It's super out of money. And look at this. This is even out of money. And look at implied vol. Like, all of these things gonna go back down to normal prices, right? Like, this is the problem with FOMOing too fast. Because if you look at today's option chain too, like, look at how much these premium. This premium used to be $1 at one point. This premium used to be $1.1 at one point, and this premium used to be $1.5 at one point. This premium used to be $1.8 per point, per contract. This premium used to be $2.6, per contract. And then, some people in Patreon chat are like, should I roll my, the $3 calls that I sold? Yeah, you can roll it by a month and make sure that whoever buy your $3 calls, by you selling it, is gonna have a cost basis break-even point at $6. How is that even rational? Just think about it. How is that even rational? Like, to FOMO that before doing any math in your head. And look at all these volume at $8. Like, how is it justifiable? You think it's gonna be 100% squeeze? But where is your basis, right? When we look at BBIG, when we look at BBIG, when we look at SPRT, when we predicted those squeeze a day before, or maybe 2 days before, in our case, we predicted maybe 3 or 4 days before, like even in close circles, right? Like, how we do that? We have indicators that show that it's gonna squeeze. It's not like this one. This one is very, very different. And you guys are very salty about the 190 share thing. Let's just go back and explain it a little bit better. Because sometimes I think my mind goes so fast. Sometimes I don't explain things properly. So then when you guys have questions, just comment down below, not in a very salty tone, but actually ask, and I'd be like, DD, I'm so sorry, I'm not really getting what you're saying here. Would you make another video elaborate what you're really trying to say on on the dilution part? And for those of you who actually, go look at and be like, the offering fee. There's one clause here. It says the purpose of all these 190 million shares are for basically double market exchange, right? So what they're justifying this is, okay, we're not doing so, George. So on the surface, what George is saying is, so GP is saying is, okay, we're not doing dilution because all of those are just, exchangeable shares from MMAX to MMAT, right? But here's the thing that he didn't tell you is by issuing this, it's basically a double listing play. It's silently diluting your share without you even realizing it's diluting your share. Because for those of you who don't understand the mechanics of double listing, it's like a Chinese company listing a company on NASDAQ using ADR. Right? It's the same thing. It got double listed. The total outstanding share stays the same, but somehow you have another 190 million shares just coming out of nowhere. So it's actually dilution. It's not no dilution. I mean, on paper, on your financial statements, there's no dilution. But in terms of the entire trading mechanics, there is dilution here. And then it operates as a real-time dilution. Because no matter how much shares they issued on the MMAX market, that just means every share it got double counted, it basically already did it at market offering. Even though on this document they said, there's not going to be any cash offerings offered. Yeah, there's not going to be cash offering offered because when you issue those, it's basically at market. Basically, when you issue those, they're already at the market price. So whoever exchanged or whoever plans to exchange or whoever basically queued up the exchange or just start buying MMAX shares, all of the shares you bought is basically already double counted in terms of like total outstanding shares. So for those of you who are buying MMAX shares on the Canadian market, you're not contributing to any short squeezes. All of your shares are basically at the market offering for MMAT or for metamaterials in general. Does that make sense now? Hopefully it does. If you need me to explain it in a more simplified version, comment down below. Or if you guys just want to see a cleared out Word document, sort of like type it out what it really means to be an ADR or when it functions as an ADR or when companies are doing double listing and basically the dilution the dilution on the surface is nothing, but in terms of trading mechanics, it's literally doing it at a market offering as it trades along the way, like basically as it trades like right after the S3 amendment. Every 1 minute after this amended S3 document, it literally means all of these shares they issued for exchangeable shares are literally doing it at a market offering, even though on the surface it's not. Hopefully that makes sense. I mean, there's a lot of information here. Hopefully, if you can't understand, go back and rewind that, or just ask the question. I will explain further more in next other videos. All right. Thank you so much, and hope to see you guys on the upside.